What's up, traders? What's up, tycoons? Super excited for today's video. We have another TLT slash market update. We're going to cover so much in this video. You're really going to enjoy it. Make sure to stay through to the end because you don't want to miss any of this valuable information I'm going to be providing to you guys. Now, the first chart we have here is the S&P 500 and TLT. TLT is in blue. It's been a leading indicator for what the stock market is going to do next. And currently we're seeing another divergence. Every time we've seen these divergences, TLT has been the leading indicator. We're going to cover that. We're also going to cover the most recent changes in the market. Bonds have typically been known as a hedge to the stock market, right? The famous 60-40 portfolio. And so when you see stocks go up, you might see your bond portfolio go down, or if you see stocks go down, you might see your bond portfolio go up. And we actually have a lot of similarities to how the bond market is supposed to perform, supposedly, right? The air quotes, supposed to perform. We're starting to see a lot of similarities to that, right? I'm going to cover that for you guys as well. And we're going to take a look at the macro charts for TLT. This is a monthly time frame right here. This is also a monthly time frame. There's a very important structures, right? This is a 5-wave bearish structure. Right here, we have a bullish pattern right here. So I'm going to go over a lot of different time frames. This is the original 5-wave structure that I was tracking on TLT. As you can see, we followed the structure very beautifully, and we just recently broke the structure since the beginning of 2023. I'm going to provide you guys an update. We'll zoom in on the chart and go over, all of the different indicators that I use. On Friday alone, I got a 90% swing trade on one day, right? I entered a position on TLT Thursday. Friday morning, I sold right after market open close. Or right after market open, I closed that position for about 90% profits. That was trading TLT options. So I'm going to break down how I really did that. Go into what are the things that I look at on TLT. But before we dive any further, I'm going to actually go over a bunch of market data that I think is really important that you guys should pay attention to because I'm paying a lot of attention to it and it's really, really interesting stuff. Now, full disclaimer, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Be sure to read through that full disclosure. Now, the stock market has had a tremendous Q1, okay? We really, really rallied a bunch in the first quarter of 2023. And 4 of the prior 7 earnings recessions did not coincide with economic recessions. Now, the reason I have this data pulled up is because we're seeing lots of talks of a soft landing and not really possibly seeing an actual economic recession. Now, my personal opinion is that we will get a recession, but I'm not here to provide you guys with just my opinion. I try to give you guys just a bunch of data and present that data to you guys in an unbiased manner. So if you see here, all right, this is really just emphasizing that 4 of the prior 7 earnings recessions did not coincide with economic recessions, right? And so we already priced in an earnings recession. What do you think that big 2022 stock market crash was, right? They're pricing in this earnings crash that we're going to get. And here recently, we've seen a lot of companies actually beat those earning expectations and they're rallying because, the big downfall that we saw in 2022, they were pricing in a lot worse earnings. And some companies are actually starting to beat those expectations. If we take a look, historically, earnings recessions have not significantly hindered the S&P 500 price returns. There's only been 4 times, or there's been more than 4 times, but I'm going to highlight them specifically and go over, what I think is most important. Okay. So if you look at the only times where it's really significantly hindered the S&P 500 price returns, all right, it's been when we've had consecutive quarters with year-over-year declines. And so when we have 4 or more, okay, we had 4 here, and we saw that in 3 months, the S&P 500 was down about 2%. But 6 months later and 12 months later, it was also positive, right? Now, over here, when we had 7 consecutive months and 5 consecutive months, we saw that within the first 3 months, it was down red. Okay, now when we had that period of 7, it was negative 18% 6 months later, and then negative 7% 12 months later. Over here, when we had 5, all right, we saw red again, right, a year later, down 25%. This was right after the dot-com bubble, in that dot-com bubble area, right? The first quarter year-over-year decline was in March of 2000, just regular 2000. And then if you look at March of 2001, 5 consecutive quarters there, and we saw a very, very big decline. Now over here we have 9, we can see a decline again, and over here we have 6, and we see a decline again. So it's really just a matter of when the S&P 500 gets 4 consecutive quarters with year-over-year declines. That's typically when we see some bearishness in the market, but it doesn't always lead to 12-month negative returns. There's been many times where it's led to 12-month negative returns, but there's been a couple times where it's been positive 12-month returns as well. Okay, so that's kind of the main thing that I wanted to highlight. Basically off of this chart, what I found that was pretty important, pretty significant. Now, the S&P 500 performance has held up well after its second straight quarter of year-over-year profit declines, right? And so if you take a look at the average here in blue, and then you look at the average X economic recessions, that's going to be over here in gray. Since 1948, the 2-month lag used following earnings reporting periods to calculate performance. And we can take a look here, and we've seen that the S&P 500 has really held up well in this time period following second straight quarter of year-over-year quarterly earnings declines. All right, so that's pretty interesting, right? If we take a look at the NASDAQ composite worst years, we have 1974, 1990, 2000, 2001, 2002, 2008, and 2022. We actually just made history, guys. Okay, here recently, the past 3 years have been nothing but history. If you've been in the stock market since 2020, pretty much every single year has been historic things. All right, and we made it into the NASDAQ composite worst years. Now, something that I want to highlight is that the following years, okay, 5 out of 7, all right, have been green. So very, very interesting. Okay, that's really what I'm paying attention to right now. Now, if things are going to go bad, right, and we are going to see negative returns, they're going to be pretty significant, right? Historically, we've had negative 20 and negative 30, but to the upside, we've had very significant moves to the upside on the NASDAQ. Right now, we're only through Q1 of 2023, and we're already at about 15%. So if you think that we're going to do, similar, it's very possible, right? I mean, we've hit 50% gains the following year, after a negative 30% decline. So, that really may be possible. I mean, as wild as that sounds, it could be possible, guys. It is something that you have to consider and have to keep in the back of your mind. I know everyone is so bearish right now, but you can't really be blindsided and just be fooled and be totally biased, right? You have to be open-minded and consider some of the different possibilities, right? That way you can be properly prepared. Now, they recently put out a survey, okay, asking investors to put out their investment outlook for U.S. equities in the next 12 months. We have 36% neutral, 36% bullish, and 28% bearish. This is pretty interesting, honestly, because typically people are more neutral, or I'm sorry, more bullish or more bearish than they are neutral. And we're really seeing that the bullish and neutral side is about even right now. So even though there's lots of fears about the economy in a recession, the smaller majority is actually bearish. Now, when asked if the U.S. stock market was overvalued, undervalued, or fairly valued at current levels, 47% said that it's overvalued, 45% said that it's fairly valued, and only 8% said that the stock market was undervalued, right? So, when you take a look at things from that perspective, a lot of people are saying like, hey, things are actually priced fair right now, and this is potentially a good opportunity, and slightly more are saying that things are overvalued. And when they asked investors, or rather financial advisors, if their clients are bullish, bearish, or neutral about U.S. stocks, only 6% were bullish, guys. The vast majority, over 63%, were neutral, and about 31% were bearish. So when it comes to retail, the retail side of things, right, and your average retail trader is extremely bearish right now. And maybe not even extremely bearish. Okay, they're actually a vast majority neutral, but there's very, very few small percentage that is actually bullish on the market right now. And when they asked them what is the biggest risk stocks will face in the next 6 months, the leading answer was a U.S. recession. Now, a close second, just 1% below that, was rising interest rates / tightening financial conditions. Number three at 20% was disappointing corporate earnings. And below there, we have a slowing economy, systemic financial problems, higher inflation, and other. All right. Now, when asked about investing to describe their current asset allocation, we're seeing about 62% in equities, 21% in fixed income, 9% cash, and 8% other. So even though people aren't so bullish, they're remaining invested in the market, specifically the stock market through equities is what it appears, right? With about 62% allocated into equities. Now, is your weighting in each of these asset classes higher or lower than 6 months ago? And we can see here that in equities, it's about 43% higher, 57% lower. All right. In fixed income, it's about 60% higher. No surprise there after, all of the recent bank collapses that we've had in Q1 of 2023. We've seen multiple banks just really just hit the fan, right? Cash, all right, is much higher. It's at 56%. We're seeing other as well in there. Which equity sector do you currently favor most? And IT, guys, information technology is the most favored. A close second behind there is actually energy. And I've been pretty bullish on energy. I actually sold out of my energy positions on the OPEC news, on the OPEC announcement of the oil production cuts. I kind of fell into that category of a sell the news event. We're seeing energy pull back, and I'm looking to see if there's a potential re-entry in there. The healthcare sector, guys, I'm not gonna lie, I've lost a little bit of money trying to short some of these healthcare stocks, right? When you look at MRK, ticker symbol MRK, Merck, you look at Eli Lilly, ticker symbol LLY. I have unsuccessfully shorted both of those companies based off technical analysis. But when you look at the fundamentals and market sentiment, those sectors and those stocks in particular have been extremely bullish. So, I've been able to cut my losses and say, hey, you know what? The trying to short these things is not working. There's other things I can make money on than trying to short those. And, healthcare is something that really could continue to push up. Now, industrials is follow closely behind, along with financials, which I really found interesting that financials right here was the number 5th favored. Now, maybe that's because a lot of people see opportunities in the financial sector, in the really good financial sector stocks after such a drawback in the financial sector surrounding a lot of these bank collapses. Now, which investment approach will perform best in the next 12 months, they asked. 46% said growth investing and 54% said value investing. So that again kind of leads a little bit more towards that bearish sentiment, right? Not too many people are bullish. In a bull market, you're going to see growth outperform value. And so if people are asked and they're saying that value investing is going to perform best in the next 12 months, they're kind of hinting towards that, we could be heading towards a recessionary period or continuing the bear market and not really heading into the next bull market. All right. Now, when asked which asset class they consider the most attractive today, equities came in at 40%, fixed income came in at 19%. We have cash, gold, commodities, and others trailing right behind. Which major U.S. equity markets look attractive right now? The U.S. at 49%, Europe, then emerging markets, China and Japan. And which equity category will perform best in the next 12 months? A large majority, over 53%, said large cap stocks. About 23% said mid cap stocks, and 24% said small cap stocks. Now, if you look at the quarterly equity and ETF purchases, this is for individual investors, guys. So this is not including institutional buying. Now, what's also very noteworthy about this, I'm going to highlight this right here for you guys so you can actually see, is that this excludes 401ks and other retirement accounts. So this is not even including people that are making monthly, daily, weekly contributions to their 401ks and other retirement accounts. You guys can see, as I mentioned, the past 3 years, we've really been living in historic times. And look, guys, since 2020 has happened, we are just seeing an insane amounts of equity and ETF purchases from individual investors really since the pandemic has started, and they haven't left, guys. They haven't left at all. I mean, just look at the pure data. It's really only increased right now. I mean, from the peak of 2021 and the peak of 2022, we are slightly lower, but we're not significantly lower considering the bear market that we had in 2022. It's really surprising to see how well individual investors have stayed involved in the market and continue to invest. That's something that I really appreciate. Now, when you look at the number of officers and directors with insider transactions, the main thing you want to pay attention to here is the buyers. All right. So buyers are going to be here in purple. Sellers are going to be here in this like tannish color. Keep in mind, guys, okay, officers, directors, the people that work at these companies, this is their money. All right. So whenever they're selling stocks, I mean, like they're getting paid in stock options, they're getting stock-based compensation. Whenever they want to actually get paid, they're going to sell, right? So what's actually more significant is seeing insider buying. That's what you really want to pay attention to, okay? That's what Wall Street pays attention to. That's what hedge fund managers pay attention to. That's what financial advisors pay attention to. And look, in March of 2023, we saw an insane amount of buyers, a really, really big spike versus earlier, right? We haven't really seen a spike this big in a while. Last time we saw a spike this big was around summer of 2022. Now, does that mean that they're perfect at timing the market? No, but it is a good clue and a good just insight into the people that are inside the business and working for the company and running the company. If they're buying, then potentially that could be a sign that it is a good long-term buying opportunity, right? Once we make it out of the bear market and into the bull market. Right now, to further show this, the number of officers and directors with insider purchases by sector. All right. And so we have at financial companies here in purple. So this is strictly financial companies. And then we have others. And look at this huge spike of insiders buying here in financial companies. This is the highest that it's been in the past 2 years since April 2021. This is the highest level of insider buying that we've seen at financial companies. And I mentioned earlier that I was actually surprised to see the financial sector as the 5th most bullish, right? And maybe a lot of that is due to people seeing that insiders are super bullish on these financial companies, right? I know Schwab here tanked a lot recently, and a lot of insider buying happened at Charles Schwab whenever the stock tanked around some of these bank collapses. To go into some more news, if we look at the wholesale fuel prices, right, we can see gasoline prices are really just plummeting. Gasoline prices are going to be in this burnt orange, brownish color, and they're not really trading along with regular gasoline prices, right? We can see that just before 2023 started, gasoline hit a bottom and has been in a strong uptrend, creating higher highs and higher lows. Meanwhile, diesel saw a short spike, all right, but it's been in a downtrend now, creating lower highs and lower lows. Another really interesting thing that I wanted to point out was the IPO ETF. We really did not see very many, if any, IPOs in 2022. But when you compare it to the S&P 500, the IPO ETF actually still outperformed in the first quarter of the year, right? If you take a look from January to present, the IPO ETF was up 10% versus the S&P 500 up 7%. Now back to TLT, guys. Okay, so I originally started making TLT videos because it's been a leading indicator for the stock market over the past year, and I'm going to explain that to you guys right now very simply. So what we have is the S&P 500 futures here in red, and we have TLT in blue. And anytime you've seen a divergence, which means the S&P is, let's say, going up and TLT is going down, TLT has been the leading indicator, and the S&P 500 has followed very shortly afterwards, right? First clue right here. We see S&P going up, TLT going down, and what do you see? Leading indicator S&P 500 follows. Same thing happens here at this point, and we see a sharp move to the downside. Now, it also doesn't only work to the downside, it also works to the upside. At this point, TLT is making higher lows while the S&P 500 is making lower lows, and sure enough, TLT is a leading indicator, and we see the S&P 500 rally. And this has happened multiple times throughout the year where TLT has been a leading indicator, and we're seeing these divergences, and we end up seeing a drop or a pop in the S&P 500 based off the divergence. And we've seen it a lot already in 2023, right? If we highlight this area specifically, when the S&P 500 is making higher highs, but TLT is making lower lows, we ended up seeing a large drop to the downside in the S&P 500. And then when TLT started making higher lows, but the S&P was making lower lows, we saw a sharp rally. And here recently, we're making lower highs in TLT, but higher highs in the S&P 500. And it's very possible, if this leading indicator divergence continues to play out on TLT and the S&P 500, we could end up seeing a significant drop in the stock market sometime soon. So you definitely want to be aware of that, okay? No indicator, no strategy is ever going to be 100% of the time. Patterns don't have to repeat themselves, but until a pattern really breaks itself and stops repeating itself, you want to pay attention to it because it has a good chance of, continuing to work. Right now, if we take a look here on a smaller time frame on the 1 hour chart, really since about March 6th of 2023, this is where we've started to see the bond market perform more as the bond market versus following, the S&P 500 so much, right? Typically, as I mentioned in the very beginning of the video, you're going to see these perform, divergent of each other, right? And so we can see here on March 6th, this is really where we got the divergence. Before then, they were pretty much following each other and trading very similarly. And here we see the S&P 500 go down and we see TLT go up, right? And then after that, over here, we end up getting another divergence because after this, they start trading very similarly. Where you start to see this up pattern right here in this region. And then we get another divergence where the S&P starts to go down, TLT is going up. Now the stock market starts to go up, TLT is going down. And you can see that they've been very, almost like mirrors of each other, right? Where one is going one direction, the other is going the other direction. We're going to see if that will continue. Now, right now, they're trending the same, right? Both the S&P 500 and both TLT on Friday were both bullish and both popped up and had a significant move to the upside. So we're going to see, to monitor, all right, and see how TLT performs. For the most part, they've been in inverse. And whenever we see TLT go up, we're seeing the stock market go down as of March 6th. And whenever we see the stock market go up, we're seeing TLT go down. So just wanted to include you guys in on that. Now, this is our monthly chart for TLT on TradingView. We have an indicator on here known as the Bollinger Bands. That's what these white lines are right here. All right, you have your upper band, middle band, and your lower band. Currently, we have this chart pattern known as an ascending triangle, okay? So if we end up breaking this level here, very close to 110 on TLT, there is a very strong chance we could get a breakout retest and head up to our major retracement levels here of 115, 123, and 130. The reason being is because markets love to make retracements, okay? If you take a look, we have the 3 Fibonacci retracement levels. We have a very strong move to the downside. We had a retracement, and then we continued heading lower afterwards, right? And since this strong move to the downside, we haven't seen any type of bounce or retracement. So it would make sense for us to get a breakout up here and come and retest one, if not all, of our major retracement levels, but there's no guarantees. Now, something else that's pretty significant is take a look at this trend line here on the RSI of lower lows, right? We had a low here, we had a low, lower low, and then look at where we bounced here recently, guys. We bounced on this trend line here. And if you take a look at the shorter term downtrend, we're actually breaking out of this shorter term downtrend right now. If you look at the MACD is very close to curling to the upside on the monthly chart. Whenever you see the red line cross below, all right, that's typically known as a sell signal. And so look at where the sell signal happened, guys, right over here. And then we had a historic drop. TLT has never dropped this much, guys. We saw over a 40% drop in TLT in 2022. And as I mentioned, guys, that's completely historic. Okay, we've never seen that before. From the 2021 highs down here to the most recent lows. That's the biggest drop that TLT has ever made. Right, even this crash over here was not even as significant percentage wise on a percent wise basis. So we're gonna see, maybe potentially is the bottom in. There's no guarantees, but we are seeing some bullish things on the monthly time frame. If we get this MACD to crossover, we could see a strong rally in TLT here sometime soon. And if we continue to stay above and break out of this resistance line here, of this trend line on our relative strength index on this monthly chart, that could coincide with that strong move to the upside as well. Now, this is also the monthly chart just zoomed in a little bit more, and this is a bearish structure, guys. So we have a 1, 2, 3, 4, 5. Markets tend to move in 3 or 5 wave structures. So we've already gotten an ABC correction to the downside, all right, and we're starting to put in this wave forward to the upside. But pay attention how we're essentially putting in a bear flag, right? We did the same thing over here where we put in a bear flag, and then we ended up breaking that channel. And once we broke that channel, we saw a significant move to the downside for our wave 3. So we need to be very cautious if we end up breaking this trend line here, that TLT could potentially head down to the $87 to $80 price targets. Now, I get those $87 and $80 price targets from our daily chart, right? And when I first started covering TLT, this was the macro structure that I was really tracking here. And what we saw was that it was going to take us down to about $87 to $81 on TLT. But as I mentioned, we really started to break the structure, right? So we were following things very well. Your wave 1, your wave 3, and your wave 5 are going to be 5 wave impulsive moves, and that's what we were getting. We were getting 1, 2, 3, 4, 5, and then your wave 2 and your wave 4, those are going to be ABC corrections, right? So everything was following textbook. We got a 1, 2, 3, 4, 5 ABC correction, 1, 2, 3, 4, 5 ABC correction, 1, 2, 3. And we never actually got our wave 3, right? We came down, made the wave 1, wave 2, and we've really just been trading within this range. If we zoom in a little bit more, we can see that we're actually putting in a large wedge right now, and we're squeezing within that wedge indicated by these purple trend lines here from these original dates, right? So, price action is getting much tighter. The wedge is getting much tighter. We should see a strong breakout to the upside or potentially to the downside sometime soon. Now, all of these blue boxes here are known as gaps on the daily time frame, and these fill about 90% of the time historically, guys. The big question is when they're going to fill, not if they're going to fill. So I love to chart them up and track them and set some alerts nearby those gaps, so that way I'm prepared to potentially play those gaps and make some profits. All right. So we have gaps down here, down to about 102 on TLT. We have a gap here down to 100. We have a gap here down to 95 as well. And then we've also got 2 gaps up, one near 108 and one at 111. So, we're trading right in between all of these gaps. There's gaps to the upside, there's gaps to the downside. We should see some more clarity on where TLT is going to head within the next month or 2. Now, one of the favorite things that I like to use when it comes to day trading and swing trading is going to be the MACD indicator, okay? And this has provided multiple entry and exit signals if you know how to use it properly, right? So when this red line here crosses below, again, that's what's known as an exit signal. And you can see we get that MACD crossover right here at this time period, and we saw a significant drop to the downside. Shortly afterwards, we get a MACD buy signal with the red line crossing up above, and we see a strong move to the upside. We get the sell signal here, and we end up seeing strong move to the downside, buy signal here, strong move to the upside. And then most recently, we got the sell signal here. We saw a strong move to the downside. On top of this, you can use some very simple chart patterns, guys. I mentioned this, wedge that we're putting in right now, a little bit of symmetrical triangle. Over here, we had a rising wedge. All right, so, this is a bearish pattern. If you break this trend line, we got a very textbook break, retest, push lower. Once you break this trend line, you're going to be looking for a significant drop. We also had a double top indicated by these 2 arrows. All right, so that's about 2 bearish chart patterns right there. Then you combine that with the MACD right here. You had about 3 signals, okay, that we are going to be heading lower if you were able to capture and capitalize off of those. Here we had bullish divergence as well as the MACD buy signal. If you're not familiar with bullish divergence, take a look at these circles. We had a low, we had a lower low. All right, and then on the RSI, we had a low and we had a higher low. So we're building relative strength as the price action is going lower in price. We got the MACD crossover. That's 2 indicators right there. We also got a double bottom here indicated by these arrows. So that's about 3 bullish signals. And this chart pattern right here with these 3 candlesticks is known as an abandoned baby. This is actually a bullish chart pattern. And on this day specifically, I entered call options and we got like, 80%, I think, on the call options on those. As I just mentioned, I entered call options here, very similar to, the abandoned baby pattern again, where you have this candlestick, then you have the gap down. All right, that's exactly what we got. We had the candlestick, we had the gap down, abandoned baby pattern, and boom, I was able to get 90% this time. And these are 1-day swing trades, guys. So, there's really, really great opportunities to make a lot of money, especially when you're trading options and how to combine some of these different indicators, how to combine some of these different signals. You can, make a lot of money, guys, and it can be really life changing. All right. Most notably too. All right. Here we had a double bottom. I also went long at this time period, made some really good profits off of that double bottom. Take a look how at this time where we created that double bottom, we were also bouncing off of that initial bullish divergence, right? Where we had the low, the lower low, the low, the higher low. We got a strong rally. We pulled back and look at where the RSI pulled back right back to that initial bullish divergence trend line. The same buyers present off of that bullish divergence were present once again and pushed price up higher. Okay, so that's pretty much it for TLT, right? 106, 109.69, 102.88. Really, these are my big major levels. As I mentioned, we're trading in between this wedge. It's getting much tighter right now. We're going to see some type of really big move in TLT here shortly. I can't tell you whether it's to the upside or downside. I don't have a crystal ball, but I am going to do my best to provide you guys with some really good updates and technical analysis, as well as my insights to the market and the main things that I'm paying attention to. If you enjoy these videos, make sure to smash that like button and subscribe to the channel, and I'm out.